today here I'm back again with another exciting stock tip. So the stock I have today for you is Gulf Oil Lubes India. So as all of you know, Gulf Oil Lubes India is a manufacturer and marketer of lubricants in India, and they have been in business for almost a century now. Started their business in 1920, so close to a century. So this company has gone through all the ups and downs in the economy, so and is sustained over the century. So this definitely a decent company to give it a look. And looking at the technicals, which is looks exciting. As you can see, the stock is moving above its 200-day moving average, and it is moving ahead by forming higher tops and higher bottoms now. And you can really initiate a buy call on the stock in the range of 765 to 778 for a target of close to 880, and you can keep a stop loss of 728. So considering this, you can really expect another 14% gain on the stock. And as you can see, there has been recently huge spike in volume for the stock. Like, there's been a lot of interest shown in this stock in the last few days. So definitely the technicals look good, and for the last 4 months, as you can see, it has been trending in this range, but now it is looking like going to break out from this range and form a higher top. So let's see how it goes. So this is all about the technicals, and let's go into the fundamentals to the Yahoo Finance portal and find it out how the fundamental looks like. Gulf Oil Lubricants India Limited Yahoo Finance portal. So as you can see, the stock has a PE of close to 21.78, and if you look at 1 year chart, it has moved almost from 527 during the month of March to a high of almost 786 in this month, and it has a good dividend yield of almost 1.78%. So, and overall market cap is 3,800 crore rupees. And going into the other stats, the company has a trailing PE of 21.78, which is decent as it is close to 20. But what is more interesting is the forward PE, which is almost 18.57, and that looks even more encouraging. So that is one factor, but also another thing is the profit margin looks pretty good, which is 11.79%. The revenue is almost 1400 crore rupees, which is good for a company which has a market cap of 3,500 crore rupees. So that looks decent. The net income is also pretty good, which is 200 crore rupees. So that's pretty good as well. And the balance sheet also looks exciting. In terms of the total cash in the balance sheet is almost 600 crore rupees. So that makes it a lot better, and in terms of helping them to go through any short-term financial uncertainties, so that will help the company go navigate through that. So overall, the stock looks good from a fundamental standpoint. All these factors look good. These are the pillars of fundamental analysis: the PE ratio, the profit margin, the cash position. So all these look good. So definitely worth considering stock for a buy. At the same time, if you look at the financials, trailing 12 months, the net income has been pretty good, almost 176 crore rupees, and also it looks good from last quarter perspective. Also, the net income looks good. The revenue has been increasing over the years, every quarter and quarter. As you can see, from 2017 to 2018 to 2019 to 2020, it has kept on increasing. Except from 2019 to 20, there is a bit of dip, primarily because of COVID and all. So considering all this, it's worth taking a buy call on the stock, and you can really initiate this position. So that's pretty much it for today. And if you like to have similar stock tips, then please subscribe to the channel and hit the bell icon. And if you like this video, please give it a thumbs up. So thank you.